The Brexit vote is continuing to create chaos throughout financial markets, and that uncertainty is causing jitters among those who want to prevent their retirement savings from going up in smoke. CCTV's Karina Huber reports from the New York Stock Exchange.
After a loss of about $830 billion on Wall Street last Friday on one single trading day, U.S. markets continued their march downwards on concerns about the impacts of Brexit. The major indices in the U.S. down by between 1.5% and 2.5%, with the NASDAQ the most negatively impacted on Monday's trading day. We saw that there was concern among investors and traders about the uncertainty of what this all means, and many of them asking, who's next? Contagion is starting to grip a lot of traders and investors here, worries about contagion rather, and the concern that there might be another country like Italy or France that might follow in the footsteps of England and decide that it too wants to exit the EU, which most believe that would be catastrophic for the global economy. Across the pond, European markets were also feeling the pain, with the major indices sharply lower. Asia, though, was a bright spot, with markets in Japan and China doing quite well. The big question right now is how much will this impact the equity markets in the long term? Most believe that we're headed for a bumpy ride for at least the next few weeks. Some, though, talk about months or years. In the meantime, we saw a downgrade for the United Kingdom by credit rating agency Standard & Poor's, reducing its AAA rating to a AA rating, and also Goldman Sachs saying that it expects a recession in the UK. Tough times ahead, that's for sure. And for those invested in 401ks, get ready for a rough ride. I'm Karina Huber, CCTV, New York.